forward, something else will be done and not just taxation. But we want to switch gears now and have a conversation with Robert Ochieng, who is the founder, the co-founder and CEO of Abujani. Robert, good afternoon.
Good afternoon, Jimmy. How are you?
I'm all right. So I want you to, we've seen how banks have performed within this first half of the year. I want to take, to get your thoughts first on when you look at some of these numbers, when you look at banks making the profit that they have been making, where do you see most of them making money? Because again, a lot of them are moving away from investing in government securities.
Yeah, thank you for having me, Jimmy. I would first say that banks are making money from the lending business. So traditionally what has happened is that the rates were a bit lower due to interest rate cap. Then progressively the rates have been going up slightly. So because of that, they've had what we call interest income, which is money they make from the lending business go up. And then secondly, where they're coming up, where they're doing well is in what we call an interest income. So that is basically from fees and commissions. So things like trade finance, digital banking, digital lending for some banks, and various instruments such as, let's say, diaspora remittances. And of course, in the short term, they've also made some quite gains from the forex trading. So they have some good spreads, which enable them to make good money in the short term. So overall, there's also a shift in the industry when you look at the demographics favoring digital, and when people want convenience, obviously they're able to do much more transactions, leading to growth in transactions and revenues associated with the transactions.
All right, Robert, there has been a lot of volatility within the FX market. What do you see as an emerging trend within the banking sector?
Yes, so I think there's a time they had the spreads were larger, but I think now the spreads are getting smaller and smaller. And I've actually seen some of the Taiwan banks actually seeing reduced growth in forex. So the short term is still an opportunity for them, given how volatile the foreign currency is, and also the fact that the Kenyan currency, the Kenyan shilling, is actually losing value when you compare to regional currencies like in Uganda and Tanzania. And since our banks, some of them have units there, that will also give them some gains based on forex. But I think this is a very temporary situation. It could probably go till the end of the year, but it is likely to stabilize in the medium term.
All right, so Robert, again, there has been a question of a lot of expansion. A lot of our banks are moving into the region. Do you see this as a potential way of growing their balance sheet, or is this a risk that they're taking, and is it a worthy risk?
Yeah, it is a worthy risk because if you look at some of the markets, for example, DRC, what we call the addressable market is very huge, and they have not even captured 20% of it. So the upside potential is huge. And when you look at countries such as Uganda, it has one of the youngest populations in East Africa. So there's the growth potential, and just the country is positioned in terms of resilience in the agriculture sector, which gives them strength now that their neighbors like Kenya are really struggling with the food situation, food inflation and stuff like that. So there's an opportunity there. Then Rwanda still remains a very strong market. So Tanzania, again, for Kenyan banks, it is doing very well, given the macroeconomic situation and the positive sentiment with the current president, Kenya. So I think overall, it's basically for the banks to learn that you can spread your wings, and as long as the risks are manageable, then you are okay. So you need to have what you call a fortress balance sheet that can absorb short-term shocks, which Kenyan banks, basically when you look at South Sudan, the Kenyan banks were able to absorb the situation that was there. So that is resilience, and I think that's basically what you need when you're looking at regional. But the upside potential is definitely huge, because when we look at some of the biggest companies globally, they operate in multiple countries, and they're able to survive different macroeconomic situations in different countries over time.
All right, so Robert, as we go into the second half of the year, what should we look out for? What should investors be looking out for?
I think investors should look at companies that are have been paying dividends consistently. There are some solid banks when it comes to dividend payments, so they might want to look deep into Stanchart, ABSA, Stanbic as well, and NCBA. So those banks, they are well positioned, because when you look at the current situation, basically, there's a shift in terms of plans wanting very diversified, bespoke financial solutions like wealth management, asset management, and those banks are the best positioned. So in the short term, they'll be very strong going forward.
All right, Robert, thank you so much for making time to speak to us this afternoon. And of course, we hope that next time we'll be able to get you to come to studio. All right, and that's how we wrap up this edition of Business Today. My name is Jimmy Mbogo. Thank you for watching from home, from the office. We appreciate you.